This time, its spending plans once again blowing away expectations, but the stock is higher.
Yeah, I mean, spending is through the roof. It's bonkers how much this company is going to spend. 100 billion plus in 2026, fiscal 2026. And so, they basically said in the prior quarter, we're going to see meaningful growth when it comes to spending, and they certainly delivered on that. They spent 72 billion in the last year, and so that's a pretty huge jump, nearly doubling what they had spent in 2025. And yet, yeah, the street reacted positively to this. It seemed to be, Meta's been a laggard. Microsoft's been a laggard too. The only one that hasn't been a laggard has been Google, thanks to Gemini 3. But I think part of the message here with Meta was kind of this AI reset that they've been undergoing. They fell short with their Llama 4 behemoth, just delayed, I guess, forever now. We haven't heard much about that yet. It was supposed to come out in April. No sign of that. And on the call, Zuckerberg was kind of going over how, he's legitimately said we're in like an AI reset. And so, they hired all of these people. They continued to spend on all of these big names. And, I think that kind of gave a little bit more hope to the street. They talk about how they're going to be integrating large language models, their generative AI, into the algorithms that kind of keep you hooked. So I guess good luck trying to not stay on Instagram for, 2 hours at a time. And they're integrating it in ads, something that they've been doing. But it does seem as though the reaction just kind of flipped from the prior quarter, despite the just coming out with the numbers saying that they're spending as much.
Meta just now releasing its Q4 results. Joining me for the hour as we cover all of this, we've got Adam Johnson, Bullseye American Ingenuity Fund portfolio manager. Let's get right to these results. So Meta Q4 EPS, I see $8.88. I don't see a clean compare yet on the bottom line, but Q4 top line revenue, $59.89 billion. Consensus was $58.42 billion. I'm looking for ad revenue. There it is. Q4 ad revenue, 58.14. The street was at 56.79. Turning to the forecast, the Q1 revenue, Meta is giving us a range here of between 53.5 billion to 56.5 billion. The street was at 51.27 billion. That CapEx number, there it is. We're looking for 2026 CapEx. Meta is giving us a range of between 115 to 135 billion. The street was closer to 110.6 billion. Just looking at the immediate reaction here, we're down nearly 3%. Now remember, heading into this print, the stock was basically flat over the past 12 months. It was actually down about 10% since they reported earnings in October. Now bulls will say, and by the way, there's plenty of them, more than 90% of analysts have a buy on this when they'll talk about industry-leading revenue growth. They'll talk about scale advantages, engagement. They will certainly talk about the attractive risk reward. But investors have had these questions about the company's big capital outlays, all the spending here on AI data centers, hiring the pricey AI talent, more questions about where the return is on all that. The initial reaction, we're lower here. I have just the man to talk to about this because, Adam, you own Meta.
I do.
Walk me through why you own it. What do you make of the print?
Oh, you have to own Meta.
You have to own it.
Yeah, you have to.
Why?
Well, you have to own all the core ingenuity companies. Meta, the obvious ones that we always talk about. Meta, Amazon, Google, Tesla. I would add Salesforce.com, ServiceNow, Palo Alto Networks. These are just core, big, best-in-breed companies that you have to own.
How do you define best-in-breed? When you're screening best-in-breed, why does Meta show up?
Well, do you know another social media company that has the reach of Meta? Nobody else reaches 2.2 billion people every day, except arguably Google, but that's different. That's search, and they dominate search. That would be best in breed. Salesforce.com is best in breed, literally number one for customer relationship management. We could go on and on. Palo Alto Networks for cybersecurity. That's best in breed. Meta is best in breed. What excites me about Meta is that they're monetizing every single aspect of it. And remember, Meta now, WhatsApp, has become the prime B2C, business to customer way of communicating, right? It used to be you'd call a 1-800 number or you'd send an email. Well, now actually all those bots, hi, my name is Susan, how can I help you today? That's all powered through WhatsApp, and they're monetizing it because they're getting paid for it. They're getting paid for absolutely everything they do. They're now selling ads in Reels. So that's a whole new thing that just started last week. So I think you have to own Meta.
But let me ask you this: how does Zuckerberg? How does he excite more people like you're excited? Because this stock, as I mentioned, we were down 10% since last time reported.
Yeah.
We're now battling back here.
Yeah, of course
we're actually
we are.
edging higher. But they see things like this. Look at this head. 2026 total expenses 162 to 169 billion. Street was close to 151, and folks are just wondering,
they can afford it.
Where's all the return on this?
Oh, they can afford it. I mean, this is not an issue. There are very few companies that are able to grow 20 to 30% per year at scale. Meta is one of them. Google's another. Amazon's another. In fact, even higher growth than that. Nvidia is another. That's why these companies trade at the prices they do, both the stock prices and then the valuation. So I'm very comfortable paying 25 to 35 times earnings for a company that's growing 35 to 40% per year. I mean, for perspective, the S&P 500 trades at 22 times earnings, but is only growing at 13% per year, right? So I'd rather pay up to get growth that in some cases is double or triple what the S&P 500 is giving me. And that's why I say you have to own these. And you can't worry about quarterly numbers. I mean, think how absurd that we come here every 12 weeks and say, okay, how are the last 12 weeks? And what are they going to tell us about the next 12 weeks? Imagine if you treated your children like that. You said, all right, kids, I got the report card. So the past 12 weeks are a little rough. How are you going to improve, over the next 12? I mean, really? They'd tell you, Dad, get lost.
Scott, it is always great to see you and to have you on the show. Meta just reported. Get me your take on the print, Scott. We were lower, then we bounced higher. What do you make of it?
Well, expectations for expenses had been rising throughout the quarter, and so I think that set the bar pretty low. Meta's spending a lot of money on CapEx and operating expenses in 26, but there's no real growth story in consumer, that comes near what Meta's doing right now. I mean, the business exceeded expectations in terms of revenue growth by 300 basis points, and then they guided at a midpoint to 30% revenue growth for the first quarter of 2026. So this story from a growth standpoint is very much intact, and I think that flips the narrative to the spending being very much justified.
And all the spending, Scott, when your clients ask you, okay, where's the ROI on all this spend? You tell them what?
The ROI is initially showing up in the revenue growth. When you look at operating profit dollar growth, they will grow operating profit dollars in 26. But Meta's building for the next 10 to 15 years, and then reporting revenue on a quarterly basis. So it's one of the very few companies where AI monetization is showing up in real time, in results. And so you have short dated improvements in revenue growth, which should continue, and very long dated spend, which again, I think is on a time horizon of 10 plus years. And so as you get to 27 and 28, I think you'll see leverage again in the business model. And keep in mind, Meta trades at 18 times forward earnings now on a GAAP base. It's a very cheap stock for the growth you're getting.
So Adam, bring you in here as a Meta investor, shareholder, believer.
Meta shareholder.
You agree with what you're hearing from Scott here?
Oh, I completely agree with what Scott's saying. And herein lies the opportunity for investors. There's an arbitrage, naturally, for thoughtful long-term investors like Scott and I, who are taking a long-term view of the company. The company's taking a long-term view of itself. That's why it's making all these investments. And so we come in every 12 weeks and try to make these, we try to game the earnings. We don't. But the market does, trying to game earnings. Did they beat this metric? Did they fall short on that metric? And the stock moves around 3, 4, 5% moment to moment. And as you can see, the stock is now up 4%. It was down 4% as soon as that one number came out where they're spending more on AI than was the estimate. So yeah, Scott's got it absolutely right. This is a long-term story, and Meta is managing the business, not the quarterly earnings.
Scott, I was listening to my buddy Josh Brown's podcast last night. Josh, very smart guy like yourself, Scott. He was talking about Meta, and he kind of framed it like this. I'm just interested to get your take. He kind of suggested, Scott, that Meta has had sort of a a story problem, a narrative problem. Because again, the stock is popping here, but heading into the print, Scott, it was down about 10% since they last reported in October. I guess Josh's point was, to paraphrase, they seem to have all these balls in the air, and Zuck has seems to have all these sort of side quests. And he was suggesting, Scott, maybe they would benefit if they were just a bit more clear in their AI story and strategy. And I'm just curious what you make of that.
Well, I think that's a valid point. And I think if you do back up 12 months, and you insert Alphabet in Meta's place and vice versa, the stories were exactly the opposite. And then Alphabet got much cleaner as the year progressed. And I think with Meta, the beauty of that is they have the ability to now provide clarity around the business. They've defined this kind of expense growth. And then I think you'll see the management team talk, quite a bit about the growth prospects of the business. And you're beginning to see, even right now and after hours, the beginnings of a narrative flip again that begins to favor Meta. And Meta trades, this is not a knock on Alphabet, but it now trades at a 6-turn discount on a multiple basis to Alphabet, despite the fact that it's growing almost 800 basis points faster. So Alphabet's margins aren't declining the way that Meta's are, but there's a heck of a lot of growth here.
So let me ask you, Scott, so you're bullish on the name, like Adam, but when clients ask you, Scott, hey, okay, it's a buy, it's an outperform, but what are the risks I need to think about, over the next 12 months? What do you tell them? What should be on their radar?
So outside of macro, so company specific, I think it would be, that the company begins to spend in areas that don't stimulate growth so that you can't see the benefits of it. And so revenue growth decelerates as they're spending. So the core business is perceived as deteriorating, and the company continues to put its foot on the gas in terms of spend. That's clearly not happening right now. In fact, the opposite is happening. Revenue growth is accelerating. But if that flipped, so the core business started to decelerate meaningfully, that would be notable, and it would be problematic for the stock.
Let me ask you, you mentioned Alphabet there, Scott. I'm just curious, any read-throughs from Meta to Alphabet, those earnings on deck, of course?
So the revenue growth healthy, you can't read much in terms of Alphabet's kind of infrastructure, but the vast majority of the business is the advertising, which the advertising industry continues to be strong. I think the primary challenge that Alphabet has is, even though search should beat and the cloud business should beat, the multiple's gone up a lot. Stock's up 60, almost 70% year to date. It's a double off the bottom. And so I think the greatest challenge that Alphabet has now is just valuation, but the underlying business is performing phenomenally well. And I think Meta further validates that on the advertising side.
Scott, as always, we are lucky to have you on the show for that analysis. Thank you, sir.
Thank you, Josh.